Hello students, good evening to all of you. Sorry for a bit of delay students, there was a net issue which was there today, so would resume it only after the proper resolution of the same. So students, now today students and tomorrow, 2 days back to back students, our target is on the balance portion of the non-resident taxation, in which I am going to take across in the today's class. Point number 1 would be the foreign tax credit, case studies on the residential status of a person. Thereafter students, we will look into the NRI, FII, ADR, GDR, and then students, we will move to the next particular area, that is the transfer pricing. So this is what students we intend to cover in the today's session, and let's then begin with this particular discussion now. So I'm straight away students going with my next discussion. Up till now students, we have discussed in section 911 the income which is deemed to accrue rise in India on account of business connection in India. There was also another point that we have discussed, which was in respect of the indirect transfer which was made. Thereafter students, the 912, 913, the salary income, when this would be deemed to have accrued or rise in India, even that was being considered in our discussion. Thereafter, the dividend income 914, 915, 916, 917, which was in respect of interest, royalty and FTS, which is one of the very important area for your upcoming November 22 examination. And now then students, there are a couple of quick points which I just wanted to share with all of you, which is about the last one, which is about 918. A small particular area students which has been there, 918, the gift tax. Students, this particular provision is actually a very recent provision, but I have not seen any question on this in the examination. But let's try to recollect this particular point very quickly on the 918. This is about the gift which has been given to a non-resident. Students, as you all are aware, if the gift has been given to a non-resident in India, then the income is accrued in India to the non-resident. But the real challenge occurs when the gift is given to the non-resident outside India. In that particular case, section 918 will get triggered if the following conditions are satisfied. If the following conditions are satisfied. So which are the conditions to be satisfied? Number 1, the gift that has been given to the non-resident outside India has to be in respect of money. Has to be in respect of money. Point number 1. The second particular point students is that this particular gift should be chargeable under section 56.2.10. Now you should be aware of 56.2.10 students. All of you are aware of 56.2.10. What is 56.2.10 students? So 56.2.10 students, as you all are aware, it talks about when the gift tax is chargeable under the IFOS. Now there are certain conditions of 56.2.10 which you all are aware, that the value of the gift should be more than rupees 50,000. Thereafter students, the gift should not be from your relative. The gift should not be on account of your marriage, and also the gift should not be on account of a will, succession, etc. So those are the criteria that should also be fulfilled. Only then, Varsha, only then the provision of section 918 will be applicable. So apart from the fact that the gift should be in money, the gift should be given outside India to a non-resident, the other condition and the most important condition is that the gift should also be chargeable under section 56.2.10. Is that clear to all of you? So this is your deemed accrual of the gift income in the hands of the non-resident recipient. Deemed accrual of, okay, sorry, Varsh. This is a deemed accrual of the gift income in the hands of the non-resident students. Parth, good evening. Now the next particular section students, this section, there is always some development in the law. Again, quite a recent provision, 9A. But again, it has not been targeted in the examination. although I always have this inhibition that the section of a non-resident taxation which is not targeted up till now, they have a fair bit of chance to get targeted. So I'll just very quickly address this section 9A. I also understand that many of the students have left this as an option. So I'll just give you a brief background, a very, very brief background, Ashwini, so that you all can appreciate what this section 9A is all about. A very brief background, students, I'm just going to give to all of you. Now, students, first of all, as I told you, today and tomorrow, students, is at 10:30 a.m. in the morning. So today and tomorrow, we have to cover up till transfer pricing fully. And also, students, tomorrow, I'm going to share you a link of the theory topics of the non-resident taxation, which you all are aware, which comes for 5 marks. The link is of 60 minutes that I'll share with all of you. Revise that so that your 30 marks revision, bullet revision, is over. Yes, Varsh, will highlight upon on this particular part. So therefore, students, today we will have at least, students, if you allow me, students, because we have to go with the target. We cannot, in fact, keep on having this lectures extended or many lectures. So today, if you allow me, students, can I stretch it till 12 o'clock? If you permit to me, students, only then. 12 o'clock, and then at least by tomorrow, I should be in a position. Tomorrow would be 10:30 to 1 o'clock. So we can finish it off up till transfer pricing completely with the practical questions, whatever are there in this regard. If you are there, then only, students, I will proceed in this way. What is your take, students? Is it agreeable to all of you? Please say, students. So, students, in this case, very quickly, on section 9A, I will just very quickly will let you know about section 9A over here. As it was said very correctly, it has got many conditions, but let's have a brief background of the same. So, students, this is India, and say, for example, this is USA. Now, in USA, there is a fund which is registered, say FII. Now, what FII does, Ashwini? Here they have the fund managers in India. Parth, here they have got the fund managers in India, in this case. Now, through the fund managers who are there in India, students, who are there in India, what they do, students, they in fact do the buying and the selling of the securities. They are doing buying and the selling of the security, students. That is the nature of the activity that they do. Buying and the selling of the securities is what involves in this particular context. Now, in this scenario, students, what happens? Obviously, with the FII, if FII is the player in this, so therefore there would be a huge volume of buying and selling transaction. There will be a huge volume of buying and selling transaction. And if there is a huge volume and if there is a huge frequency, two things, volume and frequency, then it will give rise to a business income. Then the nature of transaction would be considered as or would be characterized as a business transaction, and the securities will be considered as a stock in trade. This is the nature of the characterization of the transaction and the property which is stock in trade. Now, if it is a business income, then you all are aware the business income for a foreign company, there is no special rate of tax, and that particular business income will then end up being taxed at the rate of 40%. No FII will agree on this. So therefore, there was an amendment in the definition of capital asset. There is an amendment in the definition of the capital asset, and as per the definition of the capital asset, specifically they have provided, what they have provided, that the securities which are held by the FII, will be considered as what, students? Will be considered as a capital asset. So if it is considered as a capital asset, then in that case, the buying and selling of the securities will then result into a capital gains. Then the buying and the selling of the securities will result into a capital gains, isn't it? But still there was one confusion on this. And what was the confusion? They said that fine, in the definition of capital asset, you have specifically made the amendment as per which the securities which are held by the FII will be considered as a capital asset. But there is another big challenge in this case, and the challenge, students, is this, that what is the challenge? That we are going to buy and sell the security through our fund managers in India. We are going to buy and sell the security through our fund managers in India, and the fund manager are buying and selling the securities on behalf of the non-resident. And if they are buying and selling on behalf of the non-resident, then somebody can easily say that they are acting like an agent of the non-resident, because you are buying and selling on behalf of the non-resident. So you are an agent of the non-resident. And if you are an agent of the non-resident, students, then one can easily say that the presence of the fund manager in India will give rise to a business connection to that non-resident. And if it gives rise to a business connection, then it will result into a business income. And again, the same particular litigation will arise, that it will result into a business income taxable at the 40% rate. And therefore, students, they have to introduce this particular provision. And which provision? Section 9A. And what Section 9A? Section 9A says that, students, and Section 9A says that the presence of the fund manager in India, the presence of the fund manager in India will not give rise to business connection in India. Will not give rise to a business connection in India. To whom? To the FII. To the FII. This is what is the law of Section 9A. So they have ensured to dissipate all the concern of the FII, that look, one hand we have made the definition in, we have made the amendment in the definition of capital asset as per which the securities which are held by the FII will be considered as a capital asset. And second is Section 9A, where what we have done, that the presence of the fund manager will not give rise to a business connection in India. These are the amendment that has happened. Now, as Parth has also observed that, sir, in Section 9A there are many conditions. No, Varsh has observed this particular point, that, sir, there is a lot of condition in 9A. What is this conditions? So obviously, friends, it becomes difficult to remember all this condition, but I will at least tell you a bit of logic in that, so that if there is any twist in the question, you will be in a position to attempt it. Students, once this amendment was made, just imagine the dealers who are there in India, who are buying and selling the securities frequently, the dealers who are there in India, for them it is a business income. The dealers who are there in India, who are buying and selling the securities, for them, students, it is a business income. So all these dealers thought that why don't we all, or at least some of us, come together and we create a fund outside India, register that as an FII, and then do this particular buying and selling in India. And then do the buying and selling in India. So therefore, we will get the benefit of the definition of capital asset. And secondly, the presence of any one of us acting like a fund manager will not give rise as a business connection in India. So therefore, the government made this amendment for the real FIIs, not for the Indian dealers who come together and they set up a fund outside India, and through that fund they are doing the buying and selling of the securities in India. So they wanted to ensure that this provision is not abused, and hence they made the amendment in Section 9A. And what is the amendment? The amendment is that the benefit of Section 9A will be available only if, the benefit of Section 9A, students, would be available only if there is an eligible fund and there is an eligible fund manager. There is an eligible fund and there is an eligible fund manager. Now, those conditions which are there of the eligible fund and eligible fund manager, what are these conditions? Think logically. The logic point is this, that the government does not want that the fund should be set up by only few person. The fund should not be set up by few person. Also, the fund should not be controlled by a single person. He should not have a maximum stake in that. He, along with his family members, relative, should not have a maximum stake in that. So those are the conditions which are being provided in the criteria of eligible fund. Those are the conditions which are being provided as a criteria for the eligible fund. And that is what, students, the eligible fund is all about. So that the benefit of this amendment of Section 9 is available only to the genuine FII. And whenever we think of FII, we think of large pool of investors who have put up their fund in that FII, and through that they are making the investments in India. That is what the government wants, and not few from India set up the fund outside India and through that they start doing the business in India. So to ensure that this 9A is not abused, that they have provided for the criteria of eligible fund and eligible fund manager. I hope that all of you are clear with this particular point now, every one of you. So this is what, students, this particular point is all about as far as this is concerned. So if you see all the conditions, students, now if you want to read this particular point, please go ahead and read it, and you will find that in all these points, students, only this is what you will feel, that the fund should not be created by a few person. It should not be controlled by some single person who has got more stake in that particular fund. So that is what is the nature of amendment that has been made. The next particular one important exemption which I feel could also be targeted in the examination, students, is this exemption which you all are aware. Is this exemption, students, which you all are aware, is the Abu Dhabi Investment Authority or the Sovereign Wealth Fund or the Sovereign Pension Fund. Students, you should be aware of this particular amendment. And you all are aware, the government of India students, has made an understanding with the Abu Dhabi government, whereby the Abu Dhabi government has agreed to invest either directly or indirectly in the infrastructure projects in India. Now, obviously, they will be putting up a huge amount of investment in that particular projects. Now, if they are putting up a huge amount of investment in that particular project, so they also will require a quid pro. Quid pro means something in return. And what is that they want something in return? They want that their income, namely dividend, interest, or long-term capital gains, as the case may be, should be eligible for an exemption. So this is a sort of an understanding which the Abu Dhabi government and the Abu Dhabi government has arrived with the government of India, and by virtue of which, students, this exemption is allowed in respect of their dividend income, interest income, or a long-term capital gains which is arising out of the eligible investment that they do in India. So what is the eligible investment, students, that they do? First of all, if you see over here in this context, the nature of income which is exempt for these Abu Dhabi Investment Authority or the pension fund which is created by the Abu Dhabi government in this case. So that eligible income eligible for exemption is dividend. The first is, students, dividend, interest, and thereafter the long-term capital gains. The eligible income which is eligible for exemption is dividend, interest, or the long-term capital gains. Now that should be arising out of the eligible investment made by it in India, whether in the form of debt, share capital, or the unit. If such investment is made on or after 1st April 2020 but before 31st March 2024, and the lock-in period, students, what is the lock-in period of this investment? Is at least for 3 years. They need to hold it for a longer period. Now where they should make the investment, students, where they should make the investment, so the eligible entity where they should be doing the investment is on the business trust, or they should be making the investment in that company which is carrying on the business of developing or operating of the infrastructure facility, or category 1, category 2 of the AIF as per the SEBI, or the domestic company, students, which is having a minimum 75% of investment where in the company be above. Which company be above? The company which is primarily engaged in the business of developing and maintaining the infrastructure facility. Okay, so therefore, if I give you in a simple way, so either they make directly the investment, the Abu Dhabi investment fund or their pension fund, they make directly the investment in that company which is engaged in that infra business, or they put up the investment in that entity which has a stake in the company which is engaged in the long-term infrastructure projects. That is what should be the criteria. This is what, students, you should know it, and if that conditions are satisfied, then in this particular case, the dividend income, interest income, and the long-term capital gain students income, this will be eligible for students the full exemption. Is that clear to all of you students? Now students, now they have given you what is a specified person, like Abu Dhabi investment fund, so or the pension fund. So you can skip this part for your examination point of view. What is the criteria of pension fund? Even that can be skipped students. Short-term capital gains, Varsh is Ashwini, it is taxable. That is a point. Apart from that students, the fund from Canada also, students, the fund from Canada as well is now eligible, has been notified as the eligible fund for the investment as discussed by us just now. The fund from the Canada students also would be eligible for certain exemption. But students, you can do Abu Dhabi only, because I think that is more important, and that should be all so far as this exemption of section 1023 FE is concerned. 1023 FE exemption is concerned students. Okay, so do the exemption of Abu Dhabi. I think that much should be sufficient for you to cover up this particular point. Taxation of non-resident sports person, it is a very easy part students. I think all of you would not be even requiring this any recap on this. Every one of you are aware of the non-resident sports person or non-resident entertainers who are there. Just one point which I just wanted to introduce to all of you students. See students, here in India, even Virat Kohli could become a non-resident, isn't it? Because these people play cricket a lot, so they could also be considered to be a non-resident. You should always keep in mind that this particular provision of non-resident sports person or non-resident entertainers is applicable only if they are not a citizen of India. Okay, so just bear this particular point in mind. This is one point which I just wanted to share with all of you. Second point is that students, the tax rate at which the specified income under section 115 BBA will be taxable will be at 20%. The corresponding TDS rate is also 20%. But as I told you in the last lecture also, and I'm repeating this point again, this rate students has to be enhanced with the HEC rate of 4%. The TDS rate has to be loaded with the HEC rate of 4%, because the payee in this case happens to be a non-resident. The payee happens to be a non-resident in this case. Last point students, that they also get the exemption of filing of the ROI. These non-resident sports person or the non-resident entertainers gets the exemption from the filing of the ROI, provided two important conditions are satisfied, and the conditions are that the non-resident should have only that income which is specified under section 115 BBA, only that income and nothing more. So the income that they should have should only be that income which is specified under section 115 BBA and nothing else. And second condition is that the TDS in respect of that income, should have been deducted as per the Act rate. The TDS in respect of that income should be deducted as per the Act rate and not as per the DTAA rate. So if these two conditions are satisfied, then yes, the exemption is available for the filing of the ROI in this case. Then the exemption is available for the purpose of filing of the ROI in this case. Now going to the foreign tax credit students, the next point of our bullet revision. Before that, in the DTAA, couple of important theory points are very important. I'll just very quickly look upon to this one students. Students, now you should be aware of this particular point, that up till now our understanding was that the purpose of the treaty is to avoid the double taxation. Now there is a new point which is introduced by the Finance Act 2020, which is that one of the purpose of the treaty is also to ensure that there is no double non-taxation like India Mauritius, where there was a double non-taxation. So now the treaty has, while the government enters into the treaty, it will have to also see to the fact that there is no double non-taxation. So even this needs to be ensured while signing any treaty with the other government. This is also a very, very important point students for your MCQ theory question which has been there. And what is that students all about? Students, if supposingly a particular term has been defined in the treaty, if a particular term has been defined in the treaty, students, then in that particular case, whether this term which is defined in the treaty, will that have an overriding effect? What is your take on that? If a term has been defined in the treaty, will that have the overriding effect? And the answer is yes, it will have an overriding effect. The next particular point, students, is that if the term has not been defined in the treaty, but it has been defined in the act, if the term has not been defined in the treaty, but it has been defined in the act, so whether the definition of the act will prevail in this regard, whether the definition of the act can that be considered while interpreting the meaning of the term used in the treaty? Answer is yes, but be careful. This can happen only if the definition of that term is not there in the treaty. This can happen only if the definition of that term is not there in the treaty. Then yes, you can take the recourse of the definition. You can take the recourse of the definition which is given to us under the act. That is the next point. And the last point, students, is this, that if the treaty does not define the term, neither the act has defined the term, then does the central government has the power by issuing a notification in the official gazette to give the special meaning to that particular term used in the treaty, which is neither defined in the treaty nor under the act? Does the central government has that particular power? To that the answer is yes, the central government, students, has that particular power. Sudhir, the central government has that particular power, students. But the problem in this case, students, and one of the important MCQ question which I just wanted to share with all of you is this, that in this case, students, if you see this point number 1, where they are telling that not defined in the agreement, treaty, or not defined in the act. So through notification, the central government has the power. Through notification, the central government has the power. But please have a look. What they are trying to say is that the term shall have the meaning assigned in the said notification, and the meaning shall be deemed to have the effect. The meaning shall be deemed to have effect from the date on which the DTAA came into force. Meaning thereby, do you know, students, what they're trying to tell you? It will have a retrospective effect. Meaning thereby, if today in 2022, the central government, say for example, in India-UK treaty, there was a term. In India-UK treaty, there was a term which is neither defined in the treaty nor defined under the act. And today in 2022, the central government through a notification is providing the meaning of that particular term. Then this meaning will be considered as having the effect from the date when the treaty came into existence. This meaning will have the effect from the date when the treaty has came into existence. This is what they're trying to suggest, students, in this particular case. Is that point clear to all of you, students? Every one of you are clear with this one? And that exactly is the point, students. Rest of it, students, in this case, we are done with this. Now, foreign tax credit, students, herein, the foreign tax credit part, I will be doing one question with all of you also after this, students, but the foreign tax credit. But before foreign tax credit, students, one very important point. Very recent examination, in fact, in 2 attempts, I've seen that suddenly ICI is using rule number 115 in the question in their examination. What is this rule number 115, students? Rule number 115 is all about, say for example, a non-resident or even a resident, if they have earned a foreign income. Not non-resident, let's take across, say for example, I am a resident, I have earned a foreign income. That foreign income would have been earned by me in foreign currency. That foreign income would have been earned by me in a foreign currency. So then in that particular case, students, the foreign income which I am earning in the foreign currency have to be included in my total income, because the world income, being a resident, the world income is chargeable to tax under the act. So therefore that foreign income will be included in my total income. The challenge over here is that the foreign income is denominated in foreign currency, but the total income has to be computed in INR. So I need to convert the foreign income denominated in foreign currency into the INR. What is the conversion factor in this case? So as to convert the foreign income denominated in foreign currency into the INR, What is the conversion factor, students? So the conversion factor is given to us in section 115. Now, how do we remember it? It's a very simple thing. Just pay attention, students, on this particular point. If you have earned in the foreign country salary income, dividend income, interest income, salary, dividend, interest income, or capital gains you have earned in the foreign country, okay, then these income, if it is in foreign currency, then the same will be converted in the telegraphic transfer buying rate as on the last date of the preceding month. Last date of the preceding month, preceding to which month? The month in which these income has been accrued. These income has been accrued or they have become due. When, say for example, when the capital gains will become due. So the capital gains will become due when they are transferred. So that is the point when they become due. So therefore, in that particular case, the capital gains becomes due when they are being transferred, students. So therefore, what did I told to all of you, students, in this case? That in these particular cases, these income, students, these income primarily, whenever they become due, you have to take up the last month before it became due, preceding month, and of the preceding month last date. And whatever is the TT buying rate, that TT buying rate would be used as a conversion factor in order to convert that foreign currency into the INR. I hope that all of you are clear with this particular point. And in respect of all the remaining income, students, you have what you can say, sir, what is the example of remaining income? Like business income, like house property income. So in respect of these income, students, you have to go with the last date of the financial year. So whatever is the TT buying rate as on the last date of the financial year, that is what has to be applied so as to determine the income which has to be used for the purpose of conversion factor. Is that clear to all of you, students, now? Every one of you? So this is the first and the foremost point which I thought of sharing with all of you. The second particular point, students, is that of the foreign tax credit rules. In fact, in the last attempt, there was a foreign tax credit rule number 128, that was being asked in the examination. But I should tell you that they have given the question, there was an error in that question. We'll not be looking into that, but let's look upon to this now, foreign tax credit rules. Let's take one by one. Foreign tax credit, students, foreign tax credit, country for which it is available, which country, with whom we have to consider the foreign tax credit rule. So the point is, point number A and B. Point number A, in respect of a country with which India has entered into DTAA, taxes which are covered under that tax treaty. So therefore, this foreign tax credit rule, as the name itself suggests, students, as the name itself suggests, foreign tax credit, what does it imply? That you are a resident, the source country is say US, resident country is say India. As per the source rule of taxation, this income will be taxed in US. As per the resident rule of taxation, this income is going to be taxed in India. There is a double taxation, isn't it? So how India is going to provide relief? How India is going to provide relief to its own resident from the double taxation? To its own resident from the double taxation, there are two methods to provide the relief. First one is the exemption method. Now, as per the exemption method, students, do you know what happens in the exemption method? That foreign income is exempt from tax altogether. The foreign income, students, is exempt from tax altogether, which implies that this foreign income will not form part of the total income. And the second method to provide the relief is the tax credit method. What is the tax credit method? In the tax credit method, you will calculate the full tax liability. In the tax credit method, students, you will calculate the full tax liability till HEC. Till HEC, students, you are going to calculate the full tax liability, and thereafter you are going to provide the relief of this foreign tax that you have paid. You are going to provide the relief of this foreign tax that you have paid. Tell me which method India follows. do we follow the exemption method or do we follow the tax credit method? We only follow the tax credit method to provide the relief from the double taxation to our residents, students. Is that clear to all of you students? And therefore this is the point. So coming back, yes Ashwini. So therefore coming back to this point students, point number A, what it says, in respect of a country students, in respect of the country students with which India has entered into DTAA, taxes covered under the tax treaty. That is point number A. And point number B students, in respect of any other country. What do you mean by any other country? What does this any other country implies? So this any other country students will imply that is the country with whom India does not have any treaty. Even in respect of that students, the foreign tax credit method only is applicable. So the relief from the double taxation is given through the foreign tax credit. I think all of you have done the practical also, and you are aware about the fact that what we give is the relief through the foreign tax credit method, whereby we first calculate the tax liability including the foreign income as a part of our total income. We first calculate the tax liability including the foreign income as the part of our total income. And once that tax liability is calculated, from that tax liability, the relief is granted. How the relief is granted as per the foreign tax credit rules, that is what we are going to see students over here. So coming back on this particular part, eligibility to claim students, only a resident can claim the foreign tax credit. The first and foremost point students is that only a resident can claim the FTC. That is the first point. The second point students over here is that the tax credit should have been paid in the foreign country. The tax should have been paid where students? In the foreign country. So it cannot be the case that you have not yet paid the tax in the foreign country and you are coming here in India to take the credit. That cannot be possible. So this credit would be given to you only when you have actually paid the foreign tax in that foreign country. And the third one students is that the credit should be claimed for the corresponding income offered to tax. Obviously, is it possible that you get the foreign tax credit without including the foreign income as the part of your total income? Is it possible for you to claim a foreign tax credit without including the foreign income as a part of your total income? It is impossible. So you have to include the foreign income as a part of your total income, calculate tax liability thereafter till HEC, and then you will have to give the foreign tax credit. Is that clear to all of you students? All of you are clear with this point students? And that is how the things has to be looked upon. Now over here, this is also important for your MCQ question. Foreign tax credit, which are the taxes of which you will be eligible for the foreign tax credit? Which are the taxes of which you will be eligible for the foreign tax credit? So the taxes are income tax, surcharge and HEC. So income tax which you have paid in the foreign country, surcharge and cess that you have paid in the foreign country. What about any interest and penalty if you have paid in the foreign country? Will that be eligible for any credit? Answer is no. What about the disputed foreign tax? Again, the answer is no. For the disputed foreign tax, you will not be allowed any credit in respect of the same. And the last one students is computation of credit. Please be careful. How do you calculate this credit? Students, first of all, you need to compute for each source of income and for each country. Students, the credit has to be computed for each source of income, and for each country what you will calculate? The lower of the following two. The lower of the following two students. And what is that following two? The tax which is payable under the act and the foreign tax which is payable. So the tax which is payable under the act and the foreign tax which is payable, that is what would be the amount of credit. That is what students would be the amount of credit. Just be very careful. I will in fact give you a two particular case scenario. And recently ICI in their questions, they have asking till this particular stage. But I must say that if you do old question means just a year back, if you do the old questions, you will find the same conventional calculations which are being there. So we will do, students, very quickly 2 questions over here. And that 2 questions, students, I will be doing for all of you, just to tell you what is the recent trend and what is the old trend of the question that has been asked in the examination, so that you are aware about your commitment that you need to make in answering those questions. Is that clear to all of you? 2 questions I'm going to take you through in this context. But before that, students, herein, so the tax credit. So first of all, you will arrive at tax liability, students. You will arrive at tax liability till HEC. So whatever is the tax liability, then you will give the foreign tax credit. Then you will give what? The foreign tax credit. Now the foreign tax credit that you will be giving, students, the foreign tax credit, students, that you all will be giving would be as under. It would be lower of what, students? Or may I put it over here? It would be lower of the act rate. The act rate, students. The act rate would be compared with the foreign rate. The lower of act rate and the foreign rate. And this would be applied on the foreign income. The foreign income which is subject to DT. DT means double taxation. The foreign income which is subject to the double taxation. So that is what, students, you will give the benefit, and this is what will give you the foreign tax credit. This is what, students, will give you the foreign tax credit. So the foreign tax credit, students, as you can see, is the lower of the act rate or the foreign rate. The lower of the act rate or the foreign rate. Now this would be applied on the foreign income which is subject to the double taxation. Okay, and once you apply the rate, eligible rate on the eligible income, you get the foreign tax credit. Fine. Now be careful, students, over here. If the foreign income is given to you in the question in foreign currency, be careful here, because up till now the ICI has been giving you the foreign income in Indian currency. So there was no challenge of this calculation. But in the recent examination, they have started giving you the foreign income as well in the foreign currency. So just let's look upon to this. If the foreign income is given to you in Indian currency, then you have got your answer over here itself. But if, students, the foreign income has been given to you in foreign currency, then the foreign tax credit is also in dollar. Then the foreign tax credit would be in dollars, because then that act rate or the foreign tax rate, whichever is lower, is applied on the foreign income which is denominated in the foreign currency. This will result into a foreign tax credit which is also in foreign currency. So now we need to convert this foreign tax credit into INR. And how do we convert this foreign tax credit into the INR? In this case, then this step has to be considered. In this case, students, then this step has to be considered. And what is the step? The credit shall be determined by conversion of the currency of payment of foreign tax at the telegraphic transfer buying rate. At what, students? At the telegraphic transfer buying rate on the last day of the month, immediately preceding the month in which such tax has been paid or deducted. So the credit shall be determined by conversion of the currency of payment of the foreign tax at the telegraphic transfer buying rate. So whichever month, students, just pay attention, whichever month I have paid the tax in the foreign country, or whichever month the tax has been deducted in the foreign country, what you will do, you will take up the preceding month, you will take the preceding month, and of the preceding month the last date. Of the preceding month, students, you will take the last date, and of the last date, whatever the TT buying rate, of the last date, whatever is the TT buying rate, apply the TT buying rate on this particular foreign income or on this particular foreign tax credit, and that will give you the foreign tax credit amount in the INR. The foreign tax credit amount, students, in the INR. Is that clear to all of you, students? Please tell me, students, first all of you are clear with this, then I'll proceed with the practical question. And as I told you, I will tell you two practical questions over here. One would be where the foreign income is denominated in foreign currency, which is the recent trend of the ICI, and the other one is the old question, which is not that old, but those questions are those where the foreign income is given to you in INR. In INR. Fine, students. So shall we start with this one? Any doubts up till here, students? Shall we take the questions now? Let's take this question of Mr. Patel. Students, let's take this question of Mr. Patel. In this question of Mr. Patel, students, you will find that the foreign income is denominated in foreign currency. Then what happens? Let's have a look. So Mr. Patel, a resident of India and a senior citizen, gives you the following information. So which is the information? Point number one, he owns building in London. The same was on rent at UK pound 12,500 per month. Municipal tax of UK pound 10,000 was paid in London on 12th of February 2022. He paid interest on loan taken for construction to HSBC UK. How much is the loan amount? UK pound 13,000 per annum. Tax was deducted at 10%. Withholding tax on rent is how much? 20%, which is deducted on 31st of March. So the withholding tax, students, has been deducted on 31st of March. Now, if you are a resident and you have got a foreign house property, obviously the world income is taxable. Now, even the house property income or any income, primarily, if it is chargeable to tax under the Act, then the assessment, students, of that particular income, the assessment of that particular income shall be made in the manner laid down under the Act. The assessment of that particular income, students, shall be made in the manner laid down under the Act. So what is the manner in which it is laid down under the Act? Let's have a look, students, one by one. First, let's look upon to this over here quickly. So herein we will first look up to the second point. He had a chain of departmental store in India and a branch in London. Departmental store in India and a branch in London. He followed cash basis of accounting. Following information was provided. So what was the information, students, that was being provided? The gross receipt in India 1.75 crores and 1.25 crores is the expenditure, and in UK, where he has the branch, 30,000 UK pounds, and the expenditure is 12,500 UK pounds. Okay, so that is the other part. Further, expenditure includes rupees 5 lakhs paid to Mr. Charles, a UK resident. Expenditure include rupees 5 lakhs paid to Mr. Charles, a UK resident, for architect services rendered in relation to Indian stores on which tax was deducted at 10% and paid. Expenditure includes rupees 5 lakhs paid to Mr. Charles, a UK resident, for architect services rendered in relation to Indian stores on which tax was deducted at 10% and paid. Now, students, you tell me in this case, since there is a compliance of the TDS, then the expenditure will be allowed, which implies that full expenditure of the Indian stores of 1.25 crores full expenditure of Indian stores of 1.25 crores will be allowed as deduction. If there would not have been the TDS compliance on this expenditure, then how much? 5 lakhs of the expenditure will be removed for the purpose of deduction. It will be removed from the total of 1.25 crores. That 5 lakhs of the expenditure would have been removed because of non-compliance to the TDS provision. Because of the non-compliance of the TDS provision. Is that clear to all of you? The tax on business income in UK at 40% was paid on 30th of June 2022. I'll just go with this two calculation immediately and then let's have a look. So let's start with the rental income. As I told you students, the computation, because the income is chargeable to tax under the Act, the computation also will be undertaken in the manner laid down under the Act. So how the computation, students, will be done? So if you can see over here, students, as far as the computation is concerned, if you can see over here, students, as far as the computation is concerned, so you have got income from house property, rental income, 12,500 per month into 12, which results into 1,50,000 UK pound. Then municipal tax paid. It should be by the way, students, it should be paid by the owner, because all of you are aware, if the municipal tax is paid by the tenant, then it is not allowed as deduction. So therefore, this is what would be reduced. Then your NAV is 1,40,000. Then the standard deduction of 30% is 42,000. And finally, the interest on borrowed capital, students, is 13,000. This results into income from house property of 85,000 UK pound net. Income from house property 85,000 net. And since it is in the foreign currency, for house property income, what did I told you? For house property income, the conversion factor to convert the house property income into the Indian currency, students, you have to multiply it by TT buying rate as on the last day of the previous year, which is rupees 60. Now here there is one catch point which I just wanted to share with all of you. One catch point, students, which is there over here. You will unnecessarily, students, will do the approach which is undesirable, considering the time factor is very key for you in your examination. Many students in this case, do you know what they will do? Right from the first stage of 12,500 rent, which is in UK pound, they will start converting into INR of 60. And so would also be municipal tax, so would also be standard deduction, so would also be interest. Everything you will keep multiplying by 60 and finally you will get the same answer. Please don't do this. You should avoid, students. You should avoid this kind of a long drawn calculation and instead restrict yourself smartly to the calculation which calculation, students? First, do the entire calculation in the foreign currency, get the net amount, and on the net amount, apply the TT buying rate as on the last date of the previous year. The TT buying rate as on the last day of the previous year, and that results into 51 lakhs of your income from house property. That is point number one. Thereafter, students, you have got the PGBP. So far as PGBP is concerned, students, gross receipt of 1.75 crores, expenditure of 1.25 crores, full expenditure will be allowed as deduction, including that 5 lakhs which is already there in 1.25 crores, which was given to Mr. Charles, on which the TDS compliance was being made. So therefore, your Indian income is 50 lakhs. Indian business income is 50 lakhs. In UK, students, you have your gross receipt of UK pound 30,000 and the expenditure of 12,500 UK pound, which results into a UK pound of 17,500. And as it's a business income, even the business income will be converted as per the TT buying rate, as on the last day of the previous year, which is 60. And that will result into, the 60 lakhs 50,000. This 60 lakhs 50,000. Is that point clear to all of you, students? Now, there is also a dividend income. I'm not repeating on dividend income. It's a simple one. But let's look upon to now. Total income is 1 crore 13 lakhs 5,000 rupees. This is your total income. And thereafter your tax liability that you can see up to 3 lakhs. Why 3 lakhs? Because he's a senior citizen. Okay, resident, senior citizen. Be careful, students. Don't make the silly mistake. If the question is of a non-resident senior citizen, if the question is of the non-resident senior citizen, then you should be aware of the fact that they are having the normal basic exemption limit of 2.5 lakhs. Okay, but here since he is a senior citizen and also being a resident, so the higher basic exemption limit of rupees 3 lakhs is available. So thereafter, students, the tax is 32 lakhs. Surcharge is applicable. Why surcharge is applicable, students? Because your total income is more than rupees 1 crore. So therefore, surcharge is applicable at 15%. If this would have been between 50 lakhs to 1 crore, if the total income would be between 50 lakhs to 1 crore, then the surcharge would be at the rate of 10%. But here it has crossed 1 crore mark. Therefore, the surcharge is at 15%. Take the subtotal. Thereafter, after subtotal, add HEC of 4% on the subtotal, and the HEC is 1,47,000, and then after you get the tax liability. Now, what is the Indian tax rate? How do you calculate Indian tax rate? How to calculate how much is the Indian tax rate? So whatever is the tax liability divided by the total income. Whatever the tax liability, students, till HEC divided by the total income will give you the Indian tax rate of 33.87%. 33.87%. And what is the now let's look upon to this. For each source, the rate is also different. For each source, students, the rate is also different. Do you all agree to this one? Be careful in your old questions, which was given to you in the examination. Are you aware of it? In the old questions which has been given to you in the examination, they used to choose one country, any one country, and they used to give you multiple source. They used to give you multiple source, but the tax rate used to remain constant. The tax rate used to remain the constant figure. And that is the reason why in those questions, which we will do after this, in those old questions, students, you were not taking the credit source wise. Remember that? You were not taking the credit source wise. In fact, what you used to do, you used to consolidate all that foreign income on which there was a double taxation. You used to consolidate all the foreign income on which there was a double taxation, and then you used to compare the foreign tax rate, which was only one uniform tax rate. That foreign tax rate used to be compared with the Indian tax rate, and the lower of the two used to be applied on that foreign income subject to double taxation. But then here what you're going to do, students, over here in this particular context, students, what is that you're going to do? So you can see over here, because the rate of tax is different. Like for example, rental income. What was the withholding tax on the rental income? 20%. And the business income is taxed at the rate of 40% in UK. So the rate is different for each of the source, and hence the credit also will have to be taken for each source separately. Is that point clear to all of you? So therefore, over here, if you see, I am comparing 33.87%, the Indian tax rate, with 20%. And which is lower rate? In this case, 20%. Now that 20% would be applied on the foreign income on which there is a double taxation. That 20% would be applied on the foreign income on which there is a double taxation. By the way, which foreign income we are talking about it right now? We are talking about it right now about the rental income. Now, how much of the rental income earned in the foreign country is subject to double taxation? How much of the rental income earned in the foreign country on which there is a double taxation? So students, be careful. TDS by the foreign tenant who is paying me the rent, he is deducting the TDS on 1,50,000. All of you agree to this point? Ashwini? All of you agree to this point? Students, is it buffering, students? Just confirm once quickly. If you allow me, can I switch to the net? Or else now it is fine, students. Please confirm, students, all of you. Is it fine now? So now, students, I hope that I'll repeat it. I just came to, because I'm also watching this one, so I came to know. But now it is fine, students. Okay, so I think we can now, I'll repeat this particular point again, students, for your interest. So therefore, students, keep this particular point in mind. The rental income, students, which they have given to us, that that foreign tenant who is paying me the rent, the foreign tenant, students, who is paying me the rent, he would have deducted the TDS, students. He would have deducted the TDS on 1,50,000. The foreign tenant who is giving me the rent, he would have deducted the TDS on 1,50,000. Okay, so the tax which has been paid in the foreign country, the tax, the rent income on which the tax is paid in the foreign country, the rent income is 1,50,000 on which the tax is paid in the foreign country. All of you agree to this one? But how much of the rent income is included in the total income under the act on which the income tax is applied in India? How much of the rent is included in the total income under the act on which the income tax is payable? So the rent amount, students, in this case is 85,000 UK pounds. The rent amount, students, in this case is 85,000 UK pounds. So it is 85,000 UK pounds is the amount of rent which is included in the total income on which the Indian income tax is paid. So tell me now, to conclude, how much is the foreign income? How much is the foreign income which is subject to double taxation in both the countries? Can I say it is 85,000 pounds? So to the extent of 85,000 pounds of the foreign income is subject to double taxation in both the countries, students, isn't it? And that is what we have taken. So the lower rate is applied on the foreign income which is subject to double taxation in both the countries. The 20%, which is the lower rate, is applied on the foreign income which is subject to double taxation in both the countries, isn't it? Now if that is the case, you get now foreign tax credit. The foreign tax credit, the rate applied on the foreign income subject to double taxation in both the countries, the rate applied on the foreign income subject to double taxation in both the countries, that will fetch you the foreign tax credit. But this foreign tax credit is in dollars, that is in foreign currency. Now I need to convert it into INR. And how do I convert in INR? In the month of March, you have paid the foreign tax. In the month of March, you have paid the foreign tax. So the TT buying rate of the last date of the preceding month, the TT buying rate of the last date of the preceding month, preceding to which month? The month in which you have paid the foreign tax. So the TT buying rate as on the last date of the preceding month is what would be taken into account in this case. So the month would be February. Just have a look in the question. February, students, 28th of February 2022. 1 UK pound is equal to rupees 62 in this case. Is that point clear to all of you now, students? Fine. So this is what it is, and this results into the foreign tax credit in the INR. Now I must tell you again, in the old questions which was there, in the old question, students, which is there the foreign income is given in INR. The foreign income was given in INR, and because the foreign income was given in INR, therefore the foreign tax credit also is in INR, and therefore this conversion calculation was not required. But if they give you the foreign income in foreign currency, then the foreign tax credit also will be in foreign currency. Then in that case you need to convert the foreign tax credit into INR, for which you will apply the TT buying rate of the last date of the month preceding the month in which the tax was paid or deducted. Preceding the month in which the tax was paid or deducted. Is that point clear to all of you? All of you are clear with this, students? Now the next point, students, is about the business income. In the business income, if you all see the business income, how much is the net business income included in your total income? How much is your net business income? How much is your net foreign income included in your total income? 17,500. What is the rate that would be applied to get the foreign tax credit? What is the rate that will be applied? The Indian rate will be compared with the foreign rate. The foreign rate is 40% for business income. The Indian rate is 33.87%. So I will go with the Indian rate, which is 33.87%, and this Indian rate is what would be applied on this foreign income. This Indian rate, students, is what will be applied on the foreign income of 17,500, and that is what, students, that is what will result into the foreign tax credit. That is what will result into the foreign tax credit, students. Now, since the foreign tax credit is in foreign currency, you will convert into the INR. In which month, students, you have paid the tax for business income? So the tax was paid in the month of June. The tax was paid in the month of June, students, and therefore you have to take the preceding month last date, which is 31st of May, and the preceding month last date is 65. So rupees 65, students, is what will be taken into this account, and hence, students, you can see rupees 65. So this is what, students, is the question that I thought to do with all of you, because now very recently, students, the ICI is asking this kind of a question. But also let us deal with the old question. I'm saying old question does not mean some 10-20 years back. This old question is just a year back or so. Okay, so that is what it is, students, in this context. That is what it is, students, in this context. So just keep that particular point in mind. So we will do one more question, students, and I'll show you in this case. We will do in this case, students, this particular point. Question number 4, students. Mr. Sham, aged 47 years, is a resident individual having income from the following sources. Now, what is that income, students? From the following sources. So, income from sole proprietary business in Noida. How much is that, students? 50 lakhs. Share of profit from a partnership firm in Gurgaon. 30 lakhs. So, these are two Indian income, students, up till now. Indian income. Agricultural income gross from a coffee estate in country A, a foreign country with which India has no DTAA. With which, students, what? India has no DTAA. So how much is the amount, students? Here it is 32,000. 32,000. TDS on the above income, students, is 8,000. TDS, students, on the above income is how much? 8,000. So this is what it is over here, point number 3. Point number 4, students, is brought forward business loss of financial year 2021. Brought forward business loss of financial year 2021 in country A was, how much was the brought forward business loss, students? In country A was CAD 4,000, which is not permitted to be set off against other income as per the law of that country. Which is not permitted, students, to be set off against other income as per the law of that country. So, students, as per the law of that country, it is not allowed to be set off. By the way, tell me one thing before I proceed. Point number 3, agricultural income. Agricultural income, students, in that other foreign country, students, agricultural income in that other foreign country is exempt. In that other foreign country, students, is exempt. If it is exempt in that foreign country, my next question therefore to all of you is, will it be taxable in India or not? If it is exempt in that other foreign country, students, sorry, I'm just taking point number 4. Let me come back, students, over here. Agricultural income, students, from the foreign estate in country A, a foreign country with which India has no DDAA. CAD is 32,000. Tax deducted on the above income CAD is 8,000. So my question here to all of you is this, students. My question to all of you over here is this particular thing, that whether, students, whether this agricultural income, will it be exempt in India? This agricultural income, will it be exempt in India? Answer is no. It is only the agricultural income which is earned in India. It is only the agricultural income, students, which is earned in India, which is exempt. So this is taxable. Now point number 4 is very interesting. Brought forward loss of financial year 2021 in country A is 4,000, which is not permitted to be set off against any other income as per the law of that country. But if you are a resident and this, your world income is taxable, then you will compute the total income as per the act or as per what the foreign law says. Definitely you will have to compute the total income as per the act. And if you have to compute the total income as per the act, then whether this brought forward business loss, will that be required to be set off or not? Whether this brought forward business loss, will that be required to be set off or not? And the answer is yes. And the answer is yes. So we will set off, and be careful, after setting off my foreign income which will form part of my total income, that also will get reduced. My foreign income, which ultimately will form part of my total income, will that be reduced or not after this set off? Yes. So your double taxation on that foreign income will be a reduced amount, because only on the reduced foreign income that the Indian income tax was calculated after set off. On the reduced foreign income, only the Indian income tax is calculated. And therefore, this is what you should bear in mind in the calculation, in the final calculation of foreign tax credit, which we will consider it later on, students, Mr. Sham has deposited PPF and all, students. This is your ATC and ATD. We will discuss it as and when it comes. Now, students, here, can you see this last line? Compute the total income and the tax liability of Mr. Sham for assessment year 22-23, assuming 1 CAD equal to rupees 60. Do you know, students, what has happened in this case? They started properly. Students, by giving you a foreign income. Students, by giving you a foreign income in foreign currency, they started properly. But then the last line which says that assume 1 CAD is equal to rupees 60 has spoiled the party. Do you all agree? Yes, the last line which says that 1 CAD is equal to rupees 60 has spoiled the party, students. Do you all agree to this one, students, or not? The answer is yes. That's exactly what has happened over here, students. So this is what it is, students, in this context. Assuming that 1 CAD is equal to rupees 60, therefore what, students? In this particular context, we will say, students, that with this particular aspect, nothing would be taxed over here. Students, over here. I hope that every one of you are clear with this one. Students. Can we then proceed further, students, with your permission? So therefore, by using this rupees 60 over here, students, they have spoiled. Now, no rule 115. Rule 115 is meaningless. Even if you remember, the foreign tax credit Students, even the foreign tax credit which we used to get in foreign currency, which is converted into INR by applying the TT buying rate of the last date of the preceding month, preceding month, students, last date of the preceding month, preceding to what? Preceding to the month in which, preceding the month in which the tax has been paid, preceding to the month in which the tax has been paid. Even that calculation is useless now, because the rate is all same. You have to always take, students. Why not taxed all? Means I didn't got your question, Sudhir. In this case, I didn't got your question. So here, students, if you see, that conversion also has got no relevance now, because everything you have to convert only with 60. Everything you have to convert only in 60, and that exactly is the point. So students, with this one, students, let's have a look. And now, what is, by the way, foreign tax rate? Came to know what is the foreign tax rate, students, over here? How much is the foreign tax rate? So only there is one income, by the way, agriculture income, and the TDS that was deducted, students, was 8,000. So therefore, in that particular case, 8,000 divided by 32,000, that will give you the foreign tax rate. I hope that all of you are clear with this one. Sudhir, I have not got hold with your question. Can you explain what exactly it is? I have not got hold with your question, Sudhir. So students, let's have a look over here in this context, what it is. So now if you see over here, students, the profit and gains from business and profession, Indian income, students, is 50 lakhs. The Indian income, students, is 50 lakhs, students. Thereafter, the share of profit from the partnership firm, the share of profit from the partnership firm in India is how much? 30 lakhs. That is exempt. That is fine, perfectly fine, students. No, not an issue at all. Business profit, students, is how much? 50 lakhs. Now, that loss, business loss, that will be eligible for set off, 2,40,000. In fact, you could also set off, students, you could also set off this from the agricultural income as well. Agricultural income from that foreign country. So even that set off is possible. Even that set off, students, is possible. Absolutely not an issue. Now here, therefore, agricultural income from foreign estate in country A is taxable in India. So therefore, in this case, it is 19,20,000. 19,20,000 is the amount of the agricultural income, students. Okay. So I could also alternatively do this thing, students. Alternate calculation, I am telling you, students. Alternate calculation is, I could take Indian income outside as 50 lakhs, and the foreign income, I could do the set off. That is 19,20,000. I will do the set off with 2,40,000, and the net amount, is what I'll put up in the outer column. And the net amount, students, is what I'll put up in the outer column, whatever it is. This is also can be done in this context. Fine. Now, you get GTI 66,80,000. Then chapter 6A, I'm not discussing chapter 6A, that is simple. So this chapter 6A, 3 lakhs, and then you get your total income 63 lakhs 80,000. Then the total income 63 lakhs. So 10% surcharge will be there, students. Be careful. So whatever is the tax on that 10% surcharge, and then HEC, then you get a final tax liability, and thereafter the Indian rate 30.96%. And how you get the Indian rate? This is how you get your Indian rate. This is how you get your Indian rate, students. So the Indian rate is this point, students. 30.96% is your Indian rate, and then your rate in the foreign country. Then your rate in the foreign country, students, is 25%. Then your rate in the foreign country is 25%, students, and accordingly, the lower of the two rates, is 25%. The lower of the two rates, students, is 25%, and this 25% is what would be applied, students. 25% is the rate that would be applied on the doubly tax income. How much is the foreign income, students? How much is the foreign income which has been included in the total income on which the Indian income tax is paid? So the foreign income which is included in the total income, the net foreign income which is included in the total income on which the Indian income tax is paid is 60,80,000. How much is the foreign income on which the foreign tax was paid? How much is the foreign income on which the foreign tax is paid? It is 19,20,000. It is 19,20,000. Why 19,20,000? Because no set off is allowed. Students, no set off is allowed. And that exactly is the point. So no set off is allowed, and therefore students, in this particular context, we have got 16,80,000 as the foreign income which is subject to double taxation in both the country, and therefore we take 16,80,000 and applied on that 25% rate. This gives us the foreign tax credit and finally the amount which is there. By the way, for your knowledge, are you aware, friend, this carries half marks? Step marking is what we are discussing right now. Are you aware that this carries half marks? What is a half mark? The tax payable is how much, students? 15,55,116. Are you aware that rounding off to the nearest 10, carries half mark? This is your ICI, students. This is your ICI. Half marks is available for rounding off. Rounding off you have to do at 2 stages. One is for the total income, also you need to round off, and this also carries half mark. However, here in this particular question, rounding off is not required because already it is rounded off. But the tax liability, students, requires the rounding off, and therefore this half mark is what I have told to all of you. Is that clear to all of you? So we have done with the foreign tax credit, students. Is there any doubt now, students? Please ask me. Now I am going to the residential status part, students. I am now going to the residential status part, and in that I am going to take you through a case study, very important ICI case study, students. We are going to discuss in the residential status part. Are you ready with this one, students? Then all of you ready, students, in this context? Ready or not? This is the ultimate ICI case study, but before that I have to take you through to this one, and I will also tell you about some examination tips. Integrated case study, how it could be a disaster to attempt. And also, Pravina, be careful. If you don't know the trick to attempt integrated case study, it could be a big disaster for your examination. And that is the reason why I have deliberately put up this integrated case study for your reference, students, right now, so that you people would be aware of how we are supposed to look into these kind of questions in the exam. But before I start with this integrated case study, I would want to first do a quick recap of the residential status of an individual, because there are couple of important amendments which are being made in the recent times. There are couple of important amendments, students, which are being made in the recent times which make this particular concept very important. First of all, students, as you all are aware, an individual can become a resident in India if he satisfies one of the two basic conditions. If he satisfies, students, one of the two basic conditions. And which is the basic condition, students, that he need to satisfy? As you all are aware, students, as you all are aware, the basic condition that he need to satisfy is point number 1. Be careful. Point number 1, students, be careful. He need to be what, students? Either his stay in India should be for a minimum period of 182 days. Either his stay in India should be for a minimum period of 182 days. That is the first condition. That is the first condition, students. Or point number 2, students. Point number 2. What is the second point? If his stay in India, students, should be for minimum period of 182 days. That is the first question, particular point. Or the point number 2 is that the stay in India should be for a minimum period of 60 days in the current previous year, and in the last four preceding previous year, his aggregate stay should be for a minimum period of 365 days. So he need to satisfy one of these two basic condition. Only then he will be considered as what, students? As a resident in India. I think all of you are aware of this point. Now this second basic condition, be careful what I'm saying. This second basic condition of 60 days in the current previous year and in the last four preceding previous year, the aggregate stay of 365 days, this second basic condition, students, is not applicable. The second basic condition, students, is not applicable if, be careful now, if the individual who is a citizen of India, and he leaves India for the purpose of taking up the employment outside India. Always, students, on this basic condition, think of yourself. After examination gets over, you qualify your examination, you go abroad to take up the employment outside India. Which is the passport that you are holding? You are holding the passport, Indian passport. You are a citizen of India. Okay, so you are leaving India for the purpose of taking up the employment outside India. In that particular case, students, you will have to only see the first basic condition to decide whether you are a resident in India or not. Okay, the first basic condition is minimum stay in the current previous year of 182 days or above. Okay, now again, be careful what I'm saying. Only the first basic condition would be applicable if what? Now students, you are coming in India. Be careful, students. You people are coming in India for visiting your parents in India after you are taking up the employment outside India. Now henceforth you are coming in India to visit your parents in India. Now possibilities are very high that when you are coming in India to visit, what is the purpose? To visit, not for permanent settlement, because now I am only focusing upon the applicability of the first basic condition. Okay, so the applicability of only first basic condition would be there if, first point already I told you, when you are leaving India, you being a citizen of India, leaving India for the purpose of taking up the employment outside India. That was first point. And the second point, students, over here is, what is the second point, students? And the second particular point, students, over here is this. What is that, students? Can you tell me that, students? The second point is that you are coming in India for visit purpose. Now your status would be either a citizen of India holding the Indian passport, or you may have taken up the citizenship of that country. So therefore you are no longer a citizen of India. But can we say that you are a person of Indian origin? Can we say you are a person of Indian origin? And the answer is yes. So when you are coming in India for visit purpose, you could be either be a citizen of India or a person of Indian origin. Then in that case, we are only considering the first basic condition of 182 days. That's it. We are considering only the first basic condition of 182 days. So in the two cases, the first basic condition of 182 days would be applicable. The two cases, the first basic condition of 182 days would be applicable, and the two cases are: point number one, when you being a citizen of India leaves India for the purpose of taking up the employment outside India, or point number two, when you being a citizen of India or a person of Indian origin comes to India for the purpose of, for what purpose you are coming in India now? You are coming in India, students, for the purpose of visit. Then only the first basic condition is applicable. Now the amendment. Students, of the Finance Act 2020, very important amendment. They have made the amendment for the visit criteria. For the visit criteria, students, they have said that if you who are a citizen of India or a person of Indian origin who is coming in India for visit purpose, if your total income, if your total income other than the income from the foreign sources, if your total income other than the income from the foreign sources exceed rupees 15 lakhs, then you have to choose between one of the two basic conditions on the basis of which you can be considered as a resident in India. And which is that one of the two basic conditions? Point number one, your stay in India is for a minimum period of 182 days. Your stay in India is for minimum period of 182 days. And the point number two is, what is point number two in this particular case? Your stay in India, students, is in the current previous year is for a minimum period of 120 days, and in the last four preceding previous year, your aggregate stay is for a minimum period of 365 days. So therefore, students, if you satisfy one of these two basic conditions, then you could be considered as a resident. So where is the amendment? The amendment is on that second basic condition, which is going to be made applicable. What is that second basic condition? The stay in India is for a minimum period of 120 days, and in the last four preceding previous year, your aggregate stay should be for a minimum period of 365 days. This second basic condition is newly introduced. The second basic condition is newly introduced for which particular category of the individual? The category of the individual is an individual who is either a citizen of India or a person of Indian origin, and he comes in India for visit purpose, and his total income other than the income from the foreign sources is more than rupees 15 lakhs. His total income other than the income from the foreign sources is more than rupees 15 lakhs. Students, can you just copy down this particular part, because this is where, students, you can be expected to get one question over here. Just, students, copy on this particular part a small particular note, which I'll just give it to you, and this is what it is. Individual, students, individual who is either a citizen of India or PIO. PIO means person of Indian origin. Okay, individual who is a citizen or a PIO. Okay, and he comes to India. For visit. So this is what are the two important points that you should keep in mind. Now you have to ask the question, and the question is whether his total income other than income from the foreign sources exceed rupees 15 lakhs. This is a question, students. Whether his total income other than the income from the foreign sources exceed rupees 15 lakhs. Now, the answer can be yes or no. If the answer is no, then resident only if his stay in India is for greater than or equal to his stay in India in the current previous year. Is greater than or equal to 182 days. Or if the answer is yes, students, then resident if one of the two basic condition is satisfied. And which basic condition, students, should be satisfied in this particular case? So one of the two basic condition that we can see is this. Point number A is the same, or point number B, students. Point number B, stay in India. Stay in India in the current previous year greater than or equal to 120 days plus what, students? Plus stay in India in last 4 preceding previous years of greater than or equal to 365 days. Now, students, be careful. If he becomes a resident, students, just be very careful. If he becomes a resident because of this reason, if the SSE becomes the resident because of this condition, then his status shall be RN and NOR directly. If the SSE becomes the resident because of this condition, then his status shall be R and NOR, students. I hope that now all of you are clear with this amendment. Every one of you. This is therefore the point. Now the second amendment is this. The second amendment is this. This is section 61A. The second amendment, students, is under section 61A. And what this amendment says, students, of 61A? Any idea behind that? 61A amendment, students. It says that notwithstanding anything contained in section 6.1, meaning thereby he is not satisfying the 6.1 basic condition. What is the 6.1 basic condition? 182 days stay in the previous year, or 60 days stay in the previous year, and in the last 4 preceding previous year, 365 days. So if an individual who is a citizen of India, be careful, students, 6.1A is for whom? For a citizen of India, students. That is important. So an individual who is a citizen of India and who may not be satisfying any basic condition of section 6.1, who may not be satisfying any basic condition of section 6.1, that individual shall still be considered as, students, shall still be considered as a resident if what? Two conditions has to be satisfied. So the two conditions, he is deemed to be resident, students. Deemed to be resident. On what basis he is deemed to be resident? If two conditions are satisfied. And which are those two conditions? Condition number 1. What is the condition number 1? The total income, excluding the income from the foreign sources. Excluding the income from the foreign sources. Income from the foreign source. I'm just writing FS. Foreign source is greater than rupees 15 lakhs. Okay, and And what is the second condition, students? The second condition in this case is that he is not liable to tax. Be careful the phrase, not liable to tax in any of the foreign country. In any of the foreign country. So he should not be liable to tax in any of the foreign country in respect of his foreign income. Any of his foreign country, liable to tax in any of the foreign country in respect of his FI. FI means foreign income. So he should not be liable to tax in any of the foreign country in respect of his foreign income. So if he satisfies this particular condition, then he shall be, if he satisfies both the condition, students, both the condition, be careful. So if he satisfies both these two conditions, then his status will be that of deemed to be a resident. And be careful, students, he will be deemed to be a resident, and here also RNOR. He will also be considered as what? R and NOR. So therefore, can I say, if you happen to become the resident because of the newly introduced amendment, if you happen to become the resident because of the newly introduced amendment, then your final status will be R and NOR. Your final status, students, should be R and NOR. Is that point clear to all of you? Students, please tell me if you are clear with this point. All of you. Can we then proceed with the case study, students? If you all are clear with this proposition, can we now proceed with the case study with your permission, students? Quickly. Say, students, shall we proceed with the case study now? Now, in the context of this particular case study, students, be careful. In the context of this case study, now see, this is the integrated case study of the ICI. Beautiful case study, but just imagine the length of the case study. Are you getting to know the length? Students, first thing, students, just pay attention to what I'm saying to all of you. Again, I'm requesting to all of you to follow an approach. I'm requesting, students, all of you to follow an approach of the selection of the questions that you're going to do in your examination. Selection of the question that you're going to do in the examination, and please take a note of this without fail, because you would be aware of the fact that the direct tax papers are too lengthy to complete. And I can tell you one of the reason why you are falling short of, say, you may be leaving 30 marks of the question. Only 70 could be attempted. But I can tell you clearly that 10 to 15 marks of the question still you could have attempted properly if you would have done a proper selection of your questions. 10 to 15 marks of the question you could have still attempted further if you would have done a proper selection. The remaining 10-15 marks question, if you could not attempt, I could understand. The paper was lengthy or you could not know the question. But this is something very horrible now, students. The average attempt which is made by the students is only of 70 marks or 65 marks in some of the cases. And then to expect to pass the examination becomes a task. And even if you have passed the examination, students, even if you pass your examination, you definitely will struggle to get your aggregate. That is for sure. And therefore, you have to be very particular about this particular approach of your selection of your questions in the examination. That is the point, Ashwini. So students, I'm telling you, with 70 marks attempt that you do, first of all, the passing of the paper becomes a doubt. And even though you pass, your range of marks is like 41, 42, 43. Then that puts enormous burden on the other paper also to score handsomely well to ensure that you are sorted with your aggregate. So this is what, students, is the real game. And I'm telling you students, you have to take an extra precaution about your approach. Just I'm putting that extra 5 minutes of my time to just explain you this point, because I strongly feel that one of the major reasons students could not qualify is this. Just pay attention to it. Please take a note of it, what I'm saying to you right now. You get 15 minutes time, students. Do you get MCQ to read? Do you all get MCQ to read? And the answer is no. You never get MCQ to read at the start. That is point number one. At the same time, I must also confess that all the students for the first half an hour, irrespective of the question, irrespective of the question paper, which question paper you are attempting, whether it is FR or DT or NAT, doesn't matter. One has to admit that the first half an hour of your time you are very slow, or you are tentative. So if you are slow and tentative, can you afford to remain slow and tentative by attempting an MCQ based question which is going to give you 1 mark? Answer is no. So therefore, students, in this case, the 15 minutes extra time that you are getting it is to spend time with the descriptive question. Students. And therefore, students, your first question that you have to attempt is select in your question the two descriptive questions that you're going to hit upon first. The two descriptive questions, students, that you're going to hit upon first, but please exclude the question number 1, because even question number 1 is lengthy. Exclude question number 1. Now, chances are very high. Out of the 6 questions which are there in descriptive, please select which are the 2 questions which you could at least attempt reasonably well. Possibilities are there that because the every question has got multiple parts, say A, B and C, or A or B as the case may be. Possibilities are there that you may only know not all the 3 parts of that question. You may know, sir, the best question which I knew only 2 parts. So wait, select that. And select the other question also. You are having same reason. Sir, I don't know all the 3. I could only know the best out of that question, the 2 subpart questions. Out of A, B and C, I knew only A and C. I could not know what is B question. Fine, not an issue. Select that and attempt those 2 questions properly. Okay, whatever the best that you can do, whatever is asked in the question, attempt them properly. Like that question that you had A and C, you don't know B, please leave the space for B and attempt for C. Please leave the space for B and attempt for C. But your 2 question has to be like this. Proper presentation, and you would, whatever time, whatever initial anxiety that you may have about the paper, that anxiety is resolved by attempting the best question. That will boost up your confidence. And then once you're done with this, that's where then you will move to the after half an hour, students. After half an hour, you already have got to the next gear. Now, in this point number 2, students, you need to now decide. You need to decide whether you would go for question number 1 or MCQ as the case may be. Question number 1 or MCQ as the case may be. Why question number 1? Because question number 1 is a compulsory question and it is a stake of 14 marks. And unfortunately, the way we attempt that question is so reckless that we could get only 4 marks out of that, even though we could have attempted it properly. So if you know the question number 1 well, and how do you know that you know the question number 1? In first 15 minutes time, you would have known that yes, I know question number 1 reasonably well. That's the time when you can take question number 1. If you know it well, because it's a compulsory question, you cannot escape. And then you can take MCQ after that. Or else, if you think you are not sure about question number 1, if the question number 1 is above average, then you leave question number 1 initially and then you start with MCQ and then question number 1. So this is the order. So please pay attention. Question number 1 will be attempted before MCQ if 2 conditions are satisfied. if one of the two conditions are there. One is the question number 1 is simple, or second is it is average. But if you think that question number 1 is above average or difficult, leave that. Then you go with the MCQ. How do you evaluate? When do you evaluate the difficulty level of question number 1? In the first 15 minutes itself. By going through this question number 1 quickly, you would have known the difficulty level of that. So therefore, assuming you are attempting question number 1, then you go to MCQ. In MCQ, students, you have to be in your second or third gear. In MCQ question, students, you need to be in your second or third gear. You cannot be in your first gear. Always keep in mind. Second gear would be when you are attempting the MCQ question second. Third gear would be when you are attempting MCQ question third. But you need to ensure that you cannot afford to attempt MCQ first. You cannot be in the first gear and attempt the MCQ question. Is that clear to all of you, students? So therefore, this is the point. And then question number 4, question number 3, again, it will be depending upon question number 1 or the MCQ, which is the order that you have passed. And then thereafter, students, be careful. You will then take a call of question number 4 would be. Question number 4 would be what, students? I'm just writing here. Question number 4 would be, now, be careful. The remaining descriptive question. Remaining descriptive question, which you know the best. Even if it is only one A point, you know. B and C you don't know. But this is a question you have thought to attempt it. This is the question that you have thought to attempt it. So be it. You may not know B and C. You know only A. So remaining, you should know the best. Why I'm saying so? Why I'm saying so to add this over here? Because what happens, students, we keep this kind of question at the end. And what we do, we are in the adventurous mode with the integrated MCQ. We are in the adventurous mode in the integrated MCQ. And then what happens? We have got no time on that question which you know the best. So therefore, what happens is that in this question which may carry 4 marks, you are ending up getting only 1 mark. In this question which may carry 4 marks, you may end up only getting 1 mark. And that is the reason why you should, in your first 2.5 hours of your time, should ensure that the question, at least you know the best, you have attempted those questions. And the question which is of adventure, this question I always say, the question of adventure. Adventure question, students. What is the adventure question? Integrated MCQ. Integrated MCQ. This has to be in your last 15 to 20 minutes. 15 to 30 minutes, whatever the time that is there at your disposal. Because if the question is adventurous, the solution also can be adventurous. I'll show you how to work out the solution. But never have a suicidal mode to leave that question, even if it means only a single question, at the end, after attempting those questions which you don't know whether you know it or not. Never keep that question in the end which you know the best. Always keep that question in the end which you don't know whether you have got the knowledge of that particular question or not. So just follow this approach, students, and not only for DT, for the remaining subject also. One thumb rule, again I am repeating this. The question that you know that yes, you know this question well, probably give time for it, get into that mode, because once you get the confidence, then only you get the courage. Without confidence, there will never be a courage. And that is always a thumb rule, not only for your CA final, but for your any particular competition in the further life that you will face it. So first have the confidence and then explore the courage. Never explore the courage before the confidence. And the confidence will come once you know that whatever you have attempted the question, you have done the justice to that. And then on that basis, you know that at least you have attempted 50 marks, which you know the best properly. Now you can be adventurous. And in that adventurism, you will have a lot of courage to handle that pressure. So please allow yourself that particular space to get that courage to handle the pressure. And that will come only when you are having the proper selection of your questions. Is that clear to all of you? Or do you have still any doubt on that? Please tell me quickly, students. So now let's experiment on this question, which is there in front of us. Just imagine, students, this is such a huge case study. This is of the ICI. Okay. And thereafter, one full page I have to read. And the next page also there is 1/4 content which is given to us. And then the question begins. So in this particular case, students, how do I approach? Students, in all such cases, this is the approach that you will have. Never read the full case study, students. Never read the full case study. Read, students, always only the first paragraph. Only the first paragraph, or till the time only the first paragraph you read, and then you move directly to the question. Only the first paragraph you read and you move directly to the question, and based on that question then find the relevant data in that case study and try to get your answer. This is the approach that you have to follow. So with this approach, students, we will be doing this particular case study so that you at least are aware as to how you are going to tackle these integrated MCQ. And I told you, this courage you will get it only at the end. At the start of, if supposing at the start of the 3 hours, if I tell you to do it in this way, you will not do it. But knowing the fact that now you don't have much of time which is there at your disposal, now you will get that courage to handle it in the way I'm telling you to do it. Is that clear to all of you, students? Let's get started with this one. So here they have told you that Mr. Rajesh, aged 53 years, and his wife Mrs. Soumya, aged 50 years, were born in India. Fine. They were living in India till the year 2001. So they are not a senior citizen, and they were living in India till 2001 when they moved to country X and settled there permanently. Okay, so they have moved to country X and settled there permanently. Since the year 2010, they have become a citizen of country X. Important information. So they are citizen of country X, not a citizen of India anymore. They have 2 sons who are, but can we say, although they are citizen of India, can we say they are still person of Indian origin? Although they are a citizen of India, but can we say they are a person of Indian origin? And the answer is yes. Further, they have 2 sons who are twins, Mr. Dinesh and Mr. Karthik, who are also citizen of country X. Okay, Mr. Dinesh and Mr. Karthik, who are also citizen of country X. So they are also citizen of country X, but can we say that they are a person of Indian origin? Answer is yes. They completed their schooling in Indian school in country X. Thereafter, in 2016, Mr. Dinesh joined mechanical engineering in IIT Delhi. So he is in India now. Presence is in India from 2016. After completing his engineering, he took up employment in ABC Limited, a multinational company. Please be careful. Mr. Dinesh is from 2016 in India. So he took up the employment in ABC Limited, a multinational company in Gurgaon, at a monthly salary of 1,50,000 from September 2020. That is the period in this case. Dinesh visits his parents in country X for 1 month every year. So he is moving out of India for 1 month every year. But I can easily make it out that Mr. Dinesh should be in trouble up till now. Okay, because we are getting a sense of it that he is going to be a resident. But let's not conclude it. We have to read further. For the rest of the year, he is in India. Mr. Karthik completed his architecture in College of Architecture in country X and took up the job in LMN INC, that is in foreign country, San Francisco, in the year 2020 for a monthly salary of $5,000. So that is his salary which he has earned in foreign country. Karthik is there already in foreign country, so we don't have much on him. Appears that he is a non-resident right now, but we have to read further. Mr. Rajesh, who is the father of Karthik and Dinesh, has textile business in country X. Mrs. Soumya, mother of Karthik and Dinesh, a Carnatic musician, gives concert in country X in music program organized by community in country X. That's it. This much is more than sufficient. Now we cannot waste time, students, to read the entire thing and then again go back to the question and then again look into the facts. No time. Straight away, point number 1. What is the residential status of Mrs. Soumya? Now see how you have to read it. Mrs. Soumya. So therefore, up till now in first paragraph, I come to know Mrs. Soumya. What is the up till now the result? Recollect, she is a citizen of country X, not a citizen of India. And she is doing some activity there in that country X. That is not relevant. Now see how I read. See my approach. I am now going to the next paragraph, students. See my approach. I can see in the next paragraph, students. I can see in the next paragraph they have given to us, students, information about Mr. Rajesh. The moment I find Rajesh, students, I'll just try to see whether this is for entire Rajesh. Yes, only for Rajesh. R. Only for Rajesh this entire information is there. So this entire information is only for Rajesh. Thereafter, I go to the next paragraph. And then in previous year 21-22, Mrs. Soumya. Then I got Mrs. Soumya. Then I very quickly run through this one. And then I find that this is all. I'm just quickly going through and just trying to find in between this whether any other person is there. No, it is only of Soumya. S. So this paragraph belongs to S. And after that, I am pleased to find Mr. Dinesh and Mr. Karthik. So I know that my focus has to be only on this paragraph of Miss Soumya so as to get my solution. So let's only focus on this. So Miss Soumya for previous year 21-22 visited India on 3rd of October to 31st of January 2022. So student, 3rd of October means, see one more thing, the day when you come in India, even that has to be counted, and the day when you are leaving India, even that has to be counted. So in October, you have to include 3rd October as well. So in this case, you have in October 29 days, in November 30 days, in December 31, in January 31 days. So this is the number of days up till now. Let's see further. She was in Trichy during the month of October and November to take care of her ailing mother. This is fine. During the month of December and January, she rendered Carnatic music concert in Margachi Mahotsav organized in various music academy in Chennai. Every year she is in Chennai entirely during these 2 months. Every year, this is important. No? Every year she is in Chennai entirely during these 2 months for this purpose. So it implies that she is in Chennai every year in these 2 months. Which 2 months? December and January, which means 62 days. Every year she is in India. She also visits Trichy every year. So Trichy every year for the full month of May to spend time with her mother. So again 31 days. So 31, 31, 31. January, December, January and May. So 93 days. 93 days every year she is there, students. 93 days every year, students, is there in this case. But in the previous year, 21-22, students, over here, in this context. So plus, you will find plus 31 days of May. Students, plus 31 days of the May. So therefore, how many number of days she has spent in India, students, in the current previous year? Now she is a person of Indian origin. Mrs. Soumya is a person of Indian origin. She is coming in India, students, for visit purpose. She is coming in India. Is she coming in India for a visit purpose? Please tell me, students, is she coming in India for a visit purpose? And the answer is yes. I've told you, citizen of India or a person of Indian origin coming for visit purpose. That is important. Now just check it out. What is the total income, excluding the income from foreign sources? Just check it out that. She owns a house property in Trichy, which she has let out for 40,000 per month. 40,000 per month is a house property rental income. So 40,000 per month into 12, this will come to 4,80,000. Municipal taxes paid by tenant not allowed. For previous year 21-22, income from music concert in Chennai is 3 lakhs. Now, first of all, 4,80,000 minus standard deduction, students. 4,80,000 minus standard deduction of 30%. Minus standard deduction of 30%. This will give you the house property income. Then 3 lakhs is her performance. performance for that music concert. And then she also earned interest of 9 lakhs on FD with the Indian Bank Trichy branch. 9 lakhs she has earned the FD. So students, this is 12 lakhs and the balance, is it more than 15 lakhs students? Is it more than 15 lakhs? Answer is no. This is not more than 15 lakhs students. This is less than 15 lakhs. So this is, if you see the total, students, if you see the total, you yourself do it now. 4,80,000 into 70%. Take 70%. After taking standard deduction of 30%, take 70%. 4,80,000 into 70% plus 3 lakhs plus 9 lakhs. Can you give me the figure, students? It has to be less than 15 lakhs, students. It has to be less than 15 lakhs. So we can say for Mrs. Soumya that she is a person of Indian origin, coming in India for visit purpose, and her total income, excluding the income from the foreign sources, 15,36,000. Is it 15,36,000? All of you students? Okay, if that be the case, students, all of you students, 15,36,000. Perfect. So I will then write 15,36,000. 15,36,000. I'm just going with your calculation, students, in this case. So let me invite all of you, just have to be doubly sure. It is 15,36,000. So a person of Indian origin or a citizen of India who comes in India for visit purpose and their total income, excluding the income from foreign sources, is more than rupees 15 lakhs. In that particular case, one of the two basic conditions has to be satisfied. And what is that one of the two basic conditions? The stay in India should be more than 180 days. 182 days, students. The stay in India should be for more than 182 days. In this case, what you can make it out? 29, 30, 31, 31 and 31. So this is your, how much? 31, 31, 31, 93. 93 plus 30, 123. 93 plus 30, 123, 152 days. 152 days. So her stay in India, students, can we say is more minimum 120 days or above? 182 days she is not staying. So first basic condition is not applicable. What about the second basic condition? For the citizen of India or a person of Indian origin whose total income, who comes in India for visit purpose, and the total income, excluding the income from foreign sources, is more than rupees 15 lakhs. So the second basic condition that is added to them as per the Finance Act 2020 is minimum 120 days in the previous year, and in the last 4 preceding previous year, the aggregate minimum stay should be 365 days. So in the current year, she is satisfied, she is staying for that year, that many number of days. And how many days she is there in India every year? 93 days. 2 months in January and December and 1 month in May. 93 days into 4. It is definitely going beyond 365 days. So therefore, in that case, can we say that she is satisfying that condition relating to that amendment of the Finance Act, 120 days and the 365 days? Answer is yes. And because she is satisfying this condition, her status would be that of resident but not audit resident directly. RNNOR. Is that clear to all of you? Now the next one, students, if you see over here, what is the resident status of Dinesh and Karthik for assessment 2022-23? Dinesh and Karthik, students. Now in the examination, students, you can think of skipping this particular question. Why? Because this involves two things. If you have got very less time, because you will not end up getting the answer, because there are two particular person of whom you need to do the calculation. And if I see the last one, who is the last one in this case? The last one in this scenario is total income of Dinesh chargeable to tax. And what else I have got? This is just, I'm telling you the last one. See the last one. This question is about the total income. This question is about again the total income, students. So again a calculation. I'm just telling you, say for example, I have got only 5 minutes time. So I did of Mrs. Soumya, and now I've got only 1 minute time. So what I do, 2 and 3, 3 and 4, it's again a calculation. 2 was Dinesh and Karthik together, again a big one. But fifth one is what? Fifth one over here is status of Mr. Rajesh for assessment 22-23. So is it manageable? Answer is yes. Status of Mr. Rajesh, only one is there. So I will try to do this quickly, students, in this case. And therefore, in this scenario, Rajesh, I have something about him. So what is that for Rajesh over here, students, in this case? Now tell me one thing, students. Rajesh is a citizen of India? No. He's a citizen of that foreign country. He's a citizen of that foreign country, students. And but he's a person of Indian origin. So for Rajesh, students, quickly, the two amendments which are there, the recent amendments, he comes in India for visit purpose, so that 120 days can be considered for him. Yes, it can be considered. What about the section 61A? The 61A, which was a second amendment, can that be considered for Mr. Rajesh? No. Why? Because 61A in this question will not be applicable because none of these four individuals are citizens of India. They are all person of Indian origin, and 61A, the second amendment which I have taught you, requires a resident, requires a citizen of India. Requires what, students? A citizen of India. And that exactly is the point. Is that clear to all of you, students? So if you see of Mr. Rajesh now, what we all get it. Mr. Rajesh visits India for 1 month every year to be with his parents, who were born in Coimbatore and have always lived in Coimbatore. The details of his income for previous year 21-22 are as follows. The detail of his income from previous year 21-22 are as follows. So in that context, 1 month every year he is coming. Students, 1 month every year he is coming. So students, one thing I can tell you, if I've got only 1 minute now to answer it, 1 month every year, I should think very logically. What is that? Even for visit purpose, it is 182 days. Or the other one, students, is 120 days. The total income in that scenario. Isn't it? So he's neither in that 182 days nor in that 120 days. And 61A is not applicable for Rajesh because he's a citizen of country X, and therefore 61 is not applicable. So directly, without wasting much time, I could do non-resident. I could make him as a non-resident, tick mark, move on. This is the best that I could have done it with the limited point of time which I had. So this is what is a presence of mind. But I'm telling you, you don't get presence of mind without the confidence. And therefore, I told you what? If you have the confidence that you have at least attempted what you know the best, and the areas of adventure is something we are doing it in the last half an hour. Even that adventure, students, will give you that level of confidence. Have you seen, students, one thing? I just give you 30 seconds more, students, and then we'll go to the question. If you see, when in the cricket match, those who follow cricket, if my scoreboard is 350, say 240 without a loss of wicket or with a loss of 1 or 2 wickets in that 45th over, suddenly there is a confidence, and these people will in fact go all together. The batsmen go mad, and in the end five overs they will hit only 6 and all those things because they know they have got ample wicket. So that's the courage that they are getting and the confidence that they have got good score already on the board. As compared to, you are already 188 for 9 and you are in that 45th over. Still, you will wait for the last over to come, and then you will just see whatever the best that you could do. This is known as, family, you don't have that courage to really go about it. Although you may have the skills, but you don't have the courage to do it. And this is what I'm only talking about it. What this point you just noted, this whole goods in every walk of life, be it in your examination, be it in cricket, be it in sports, everywhere. Courage comes only with confidence. And therefore, keep the courage for the adventurism. And your adventurism is your integrated MCQ, and hence I will suggest strongly your integrated MCQ has to be the last. Are you convinced with the order of the question which I have told to all of you? And never leave that question at the end which you know you could do a good justice to that. Never leave that question in the end which you know you could do a good justice to that. So I will just now, for the sake of completeness, Mr. Rajesh visit India for 1 month every year to be with his parents who were born in Coimbatore and have always lived in Coimbatore. The details of his income for previous year 21-22 are as follows. Now, are you requiring the details of Mr. Rajesh's income for deciding the residential status? They are just trying to confuse you by 6-1A, because these details of 6-1A, many students will start thinking about 6-1A now. Because even if you are a non-resident as per 6-1, you can still be considered as a resident as per 6-1A if your total income, because see here, see the beauty of the ICI, the doubt that they want to give it in your mind. See the beauty of the ICI, students, the last line, this line. Country X does not levy tax on income earned by a resident of country X outside India. They don't levy tax on income. So it implies that he is not liable to tax in the foreign country. He is not liable to tax in the foreign country. That is the feeling that you get, and suddenly you will jump into the conclusion that I need to check 6-1A, for which you will check the total income. You will in fact, you will try to compute the total income, this data excluding the income from the foreign sources. Don't do that. It's a real trap which the ICI has laid, because this is required. 6-1A applicability is only for a citizen of India, and here we have already seen in the first line of the question that Mr. Rajesh and all his children and his wife, they are not a citizen of India, but they could be considered to be a person of Indian origin. So yes, they are a non-resident. Now, solving for Dinesh and Karthik students, doing it systematically. We'll just try to wrap it up this thing fast now, students. Mr. Dinesh resigned from his job in ABC Limited. See, Mr. Dinesh was in India right from 2016. He did his IIT also in India. So he spent time in India for quite a long time. So here Mr. Dinesh resigned his job in ABC Limited on 20th September 2021 and took up an offer for employment in MNC Inc. New York at a salary of $7,000 per month. At a salary of $7,000 per month. He had submitted his resignation to ABC Limited on 20th of August 2021 and thereafter served a notice period of 1 month as per the conditions stipulated in his terms of employment. He left India on 20th of September, students. Now this is what will decide whether he is considered as a resident or not. Now students, in this case, is Mr. Dinesh, he is leaving India for the purpose of taking up the employment outside India? Yes, he is leaving India for the purpose of taking up the employment outside India. Are you going to apply only one basic condition of 182 days over here? Are you going to apply only one basic condition over here? No. That again, that I told you, think about yourself. That person leaving India for the purpose of taking up the employment outside India is applicable only in the case of citizen. Only when it comes for visit, that either a citizen or a person of Indian origin, they are involved. But here, therefore, we will say that Mr. Dinesh primarily will have to see whether he satisfy one of the two basic tests, namely 182 days minimum stay in the current previous year, and the second particular is minimum stay 60 days in the current previous year, and in the last 4 preceding previous year, his minimum stay should be how much, students? 365 days. Is that clear to all of you, students? So in that particular context, students, over here, obviously he is not staying in India for 182 days, because it is 20th of September and it is better that you should know, and before that on the examination you should know in the previous year what should be the date that he should leave India to be considered as a resident. So that date calculation should be known to you, students. Always keep that in mind, because anyway, instead of solving this in the examination, if you know it beforehand, it will be helpful for all of you. 30th of April, 31st of May, 30th of June, 31st of August, and then 20th of September. So April, May, June, July, no, sorry. August and September, 28 days. How many number of days, students, in this case? 150. It is 181 days, students. 181 days, students. So tell me one thing, in your, now you please by heart this, he should leave any individual, if they are leaving India on 29th of September, they are resident. Who's leaving India on 29th of September? That means from April they are staying and they are leaving India on 29th of September. Are they a resident? And the answer is yes. Any individual students leaving India on 28th of September, their stay in India being less than 182 days, they will, obviously we have to see the second basic condition also, but at least 182 conditions are not satisfied. But what about the second basic condition? Did he stayed for 60 days minimum? Yes. Did he stayed for the last 4 preceding previous year for 365 days? And the answer is yes. So is he a resident? Again the answer is yes. So Mr. Dinesh has satisfied the second basic condition and therefore he would be considered as a resident. Okay, again I am telling you, second basic condition has to be tested for Mr. Dinesh because he is a person of Indian origin. He is not a citizen of India. If he would have been citizen of India and he is leaving India for taking up the employment outside India, then only the first basic condition would have been applied in this case. Is that clear to all of you students? So he is a resident, and in this context students, we will say that he is a resident, and the fact that he is staying in India from 2016, resident and audit resident. So no doubt about this, Dinesh. Karthik, let's see. Karthik resigned from LMN INC dot on 30th of November 2021 and joined PQR Limited in Mumbai. So he resigned from that foreign company on 30th of November 2021 to join PQR Limited in Mumbai. So Dinesh already concluded R and OR. Let's see for Karthik. Karthik resigned from LMN INC dot on 30th of November 2021 to join PQR Limited in Mumbai. He came to India on 2nd December 2021 and joined PQR Limited on 5th of December 2021. When he is coming in India, students, in this case, on 2nd December. Now, students, he is coming in India on 2nd December. Who is he? Person of Indian origin. Is he coming for visit? No, he is not coming for visit. So, both the basic condition will have to be considered. Both the basic condition will have to be considered. Which basic condition, students? First one is that 182 days. Definitely, he is not staying 182 days in India because he is coming in India on 2nd of December. Second basic second basic condition, students. Yes, he is satisfied. 60 days. But let's see last 60 days in the current year he is satisfied. But what about 365 days in the last 4 preceding previous year? Is he satisfying that? So if we have to see this very carefully. So he came to India on 2nd December 2021 and joined PQR Limited on 5th December 2021. His salary in PQR Limited is 99,200 per month. He used to visit his maternal and paternal grandfather in India for 2 months, that is July and August, during his summer holidays up to the year 2019. Up to which year, students? Up to the year 2019. In the year 2020, he visited India for 1 month in July 2020. In the year 2020, he visited India for 1 month in July 2020. In this particular context. So you tell me only 1 month he has come and 2 months he has come for in July and August. So he came in 2020, students. In 2019 he came for 62 days. In 2020, students, he has came for 1 month, July 31 days. So did he touch that 3 figure? Or did he is not even touching 3 figures. So students, can we therefore say that Mr. Karthik is a non-resident? Yes. So final answer, students, would be Dinesh resident, Karthik non-resident. Dinesh resident and Karthik non-resident. This is the final answer of our question. Is that clear to all of you? Is that clear to all of you, students? That's exactly the point. So students, we are done with this particular proposition, students, in this case, in this scenario, students. And now, as I told you, herein, students, this total income, now you can do it. Be careful, huh? Mr. Dinesh, students, here only one point I just wanted to put across. See, this ICI question, students, last point, just pay attention. Mr. Dinesh is resident and ordinary resident, R and OR. Karthik is a non-resident. So for Karthik, only the Indian income is taxable, which means whatever is the salary that he has earned in India, only that would be taxable. Okay. Whereas for Mr. Dinesh, he was there in India. Students, he was there in India till 20th of September and he was doing his job in India. Fine. So Indian income, whatever is the salary that he has earned in India, that will be taxable. And whatever is the salary now that he is going to earn in that US, I think he has joined October, isn't it? 3rd October he has joined. So that particular salary income, because he is R and OR, that foreign income, will that also be taxable? That foreign income, will that also be taxable, students? To that the answer is yes. That foreign income, students, that would also be taxable in this case. I hope that all of you are clear with this one. And now see which foreign income he has earned, and this is the beauty of the ICI. So if you see of Mr. Karthik, he is going to get a salary of 7,000 per month. Students, Mr. Karthik is going to have a salary of US dollars 7,000 per month. Can you see that? Mr. Karthik is going to have a salary of US dollars 7,000 per month, students. And with the salary of US dollars 7,000 per month, with the salary of US dollars 7,000 per month, students, the question to all of you is, the question, students, to all of you is this. What is the question? With the salary of 7,000 per month, students, he is going to earn. Rule number 115 applies, Ashwini, indeed. Rule number 115 will apply. And see, when he joined that MNC, he joined that MNC on 1st of October 2021. So tell me one thing, October month salary, which is due to him, the TT buying rate, October month salary of $7,000. The TT buying rate for the conversion that you will take would be of the month of September end, 30th September end. Same would also be for November. You will take up October end TT buying rate. December, November end TT buying rate. January salary, your December end TT buying rate. February salary, January end TT buying rate. And March month salary, in this case February end TT buying rate. This is how you are going to take up the TT buying rate, and this is the calculation, students, that has been done. See, this is what they have given to you, TT buying rate. And therefore, as I told you, September, October, November, December, January and February, that is it. The March month salary, the TT buying rate of 20th of February is what you're going to take it up. The March month salary, the TT buying rate of February end, that you are going to take it up. Is that point clear to all of you, students? Every one of you? So if that is the case, you can just have a look, see how they are doing it. This is 70, this is September month. This is for November, this is your, for November salary, October end. For December salary, November. For Jan salary, December end. For February salary, it is Jan end. For March salary, it is Feb end. This is how they have tested this. Obviously, in this case, it will take time, but this is what it is, students. So therefore, this is what it is, students, at the end of it. Students, here in the last particular point of the residential status is that of the poem. The residential status, students, is that of the poem. Poem test, students, all of you are aware. Just keep in mind one particular point, students. And this is where the trick lies, so far as the poem is concerned. Students, the poem guidelines has to be applied. Are you aware of this point? Because many students are not aware of this point. For a foreign company, they will be considered to be a resident in India. For a foreign company, students, they will be considered to be a resident in India if their poem is in India. If their poem, students, is in India. Now, if you see for a foreign company to be a poem in India, we always say that. But be careful, there is one category of the foreign company to whom poem will not apply. To whom poem will not apply. Which company? The poem provision will not apply to a company having a turnover or gross receipt of rupees 50 crores or less in the financial year. So a foreign company having a turnover or a gross receipt of rupees 50 crores or less in a financial year, the POEM concept will not apply. In which case, do you know, in such case, the foreign company will be considered, as a resident. When, students? As a resident only if what, students? The foreign company, students, will be considered as a resident only if its control and management is wholly situated in India. This is what is the test for this type of foreign company. So only that foreign company whose turnover or the gross receipt is more than 50 crores. For them only, students, the POEM is applicable. Now, students, I think all of you are aware of this particular point, so I did not in fact highlight on this, but still couple of points I just need to tell you so that you don't make an error in the examination. First of all, students, as you all are aware, to decide on the POEM test, first you need to check whether the foreign company is satisfying the active business outside India test or not. For which, how do we decide that the business of that foreign company is active? For that, the passive income should be not more than 50% of the total income. The passive income in that case of that foreign company should not be more than 50% of the total income. That will render the business of the foreign company as active. That will render the business income of the foreign company as active. And the second one, students, is this particular point. What is this particular point, students? For each of the following, the threshold is less than 50%. For each of the following, the threshold is less than 50%. Now, this is the critical part, students. In India, the asset presence, the number of employee presence, and the payroll given to the Indian employee, each of them should be less than 50% of the total of that foreign company. Each of them, students, should be less than 50% of the total of that particular foreign company. This is the criteria, students, that needs to be fulfilled. Is that clear to all of you? This criteria, students, needs to be fulfilled. Only then you can take off in this case. So if I look to this one very, very carefully, students, very, very carefully, then what do I get it over here? So students, this is what we all get it in this particular context. So therefore, what they say that, first of all, students, passive income is simple. The only point I wanted to discuss with you is how to decide the asset presence in India is less than 50%. Employee presence is less than 50%. And their payroll. What are the relevant test, students, in this particular case? So the relevant test, students, when it comes to asset, be careful over here. Asset in this case, in case of individually depreciable asset, you have to take up the average of the opening and the closing of that individual opening and closing. If it is a block of asset, students, then you take up the average of opening balance, opening WDV and the closing WDV. And in the case of any other asset, the value as per the books. Although like any other asset, although up till now the ICA hasn't asked any such questions, but in that elective paper 6C, they have already given this table: opening WDV, closing WDV, India asset, foreign asset. So therefore, you have to then go with the average for everything. So in this case, of the value of the asset. Okay, so just keep that particular point in mind. Okay, but any other asset, students, they have also will try to confuse you for giving for debtors opening balance and the closing balance. Please don't go with that. For those any other asset, students, it is simply the value as per the books of accounts. Is that clear to all of you? The employee test, students, in this case, there is one very important particular point for the employee test. And what is that, students? So far as the employee is concerned, students, so far as the employee is concerned, the average of the number of employee as at the beginning and as at the end of the year shall include what, students? Shall include the person who, though not employed directly by the company, students, but perform the tasks which is similar to those performed by the employee. So this is like a contractual labor who are not in the payroll, but they are contracted by you or hired by you, although not under your payroll, but they are performing the same task as that of your employees. So whether that count also needs to be considered while deciding the number of employees, and the answer is yes. Okay, what does payroll include? I think all of you are aware of it. I think that is the point which I just wanted to touch upon. So with that, students, we are done with the residential status also in this particular context, and every other particular aspect, students, we have done with it. So students, what I will do now, students, I think we will stop over here in this particular context. Actually, I think we will stop now because tomorrow 10:30 when I start with all of you, 10:30 p.m. students, I'm 10:30 in the morning. Because those are topics of NRI, ADR, GDR, FII. So I want that all of you should have a fresh mind to handle that particular level of questions. So therefore, I will not try to, in fact, we will do that first. And after we are done with that first, then we go to transfer pricing in that same class. Okay, so first we will complete this taxation of NRI, FII, ADR, GDR in the 10:30 a.m. lecture. I'll just share you the link of that in my Telegram channel, so you can just have a look to that, and thereafter the transfer pricing. Okay, so that is what it is, students, in this context. Now then, students, one very quick particular announcement, students, I'll make herein of couple of announcements, students. For which topic you are talking about it, Ashwini? Yes, you can do that. So students, over here, this particular point, there is a 20% discount which is going on, family, and that is the offer is there only up till 30th of September. The offer in this case, students, is only there up till 30th of September, students. And what is this offer? 20% discount. Now this is, students, for everything, be it for the iconic batch or be it for the plus subscription, students, be it for the iconic batch, students, and be it for the plus subscription. 20% you will be eligible for the discount. And if you see very carefully, this is applicable. Now see, the subscription which is there goes from 3 months and it goes up till 36 months. The subscription benefit which you all can avail, as you can see, can start with this 3 months period, and it can go up till, students, up till what? Up till, students, in this particular case, to 36 months. So therefore, any students have got November attempt, they can still think of the 3 month subscription, or even May 23 attempt if supposedly they want to do a particular subject only. They can look for that particular 3 month subscription. Those who have got, say for example, November 23 attempt, for them they can go for this 12 month subscription. May 24 also they can look for that 12-month subscription now. For them also it is advisable. November 24, for them 24-month subscription is advisable in this particular context. May 25, 24 months is advisable, or for that matter even 36 months, depending upon they want to do it group wise or whatever it be. And it is, again I'm telling you, it is there for both the plus as well as the iconic subscription. As far as the features, as you all are aware, students, by the way, students, in the slide you can see that it is only for this second group, but I must say that it is applicable for all the CFR groups which are there, group 1, group 2, or even for the combo that we have. So it is applicable for everything. To get this 20% discount, students, you will have to put up the referral code while taking up the admission, and the referral code, students, that you will do is CADS. The referral code, students, that you will do would be CADS. That is the referral code, students, that you are going to put it for the purpose of getting this particular benefit. The last point, students, is about the comparative of the iconic and the plus subscription which is there. The last point, students, is the comparative between the iconic and the plus subscription. Generally the features remain the same, but add on in the iconic, what happens which is not there in the plus is that here in the iconic, both of them, whether you take plus or you take iconic, apart from the lectures, live lectures, recorded lectures, unlimited viewership, etc., both of them are eligible for free test series. In this case, they are eligible for the same. But in the iconic, what stands out is that you are giving the physical textbooks. One. Apart from that, students, you are also being provided with physical textbooks are being given to you. You are also being given, students, in this case, there are like round the clock, there are doubt solvers who are there, mentors are being provided to you. So those are the facilities which are being there with the iconic subscription. So that is the benefit of taking up the iconic subscription in this case, students. So that's the reason why it is strongly advisable that students, at least who have got a longer duration to go with, they should think of taking up the iconic subscription with the platform. So that is the point, students, over here. One more thing which I just wanted to share, students, with all of you. This PDF can get opened only then it is possible. Students, over here is about the fact that there is a test series, students, of 100 marks. Evaluated test series program. So I must tell you that there is this evaluated test series program, students, which has been there, which primarily I will suggest very strongly that you all take the benefit of that. In the evaluated test series, students, it is going to start off in October, and strongly advise that you all please ensure to go through the same. You will find the details in our Unacademy website primarily. So that is for 100 marks, essentially meant for the students having their November attempt. 20th of November, I suppose it is starting off. 20th of November it is starting. So students, by doing that, 25th November, students, is your direct tax paper. You have to take up group wise. What is the only advantage, students, is that before you go with your, and you would get the paper would be set as per the ICI pattern. That is one of the feature. Secondly is this, that you would get your evaluation copy done within a week's time, and that you can have it. So well, just before the examination, well before the time, you get your evaluation copy also. And therefore, students, this is highly recommended. You should opt for it. At least this is your final journey, what we were discussing today about the speed and everything. So this is what ultimately, at least try out, and you will come to know that okay, this is where you were going wrong. So it is better to take across that particular test at that point of time, and then at least you know that whether you were in a position to wrap it up in that particular student limited duration of time or not. So therefore, this is one thing which I strongly will recommend to you. to take up this particular thing, and this is what it is. So I hope that students, you all take up this benefit which has been there, and that is all of it. So students, I'll see you then tomorrow. 10:30 a.m. in the morning is the timing for our lecture, which I'm going to start off with first NRI, FII, ADR, GDR, and then start with the transfer price. See you then, friends. Good night to all of you.